Hi, are you looking for the best interest rate? Are you wondering how to even get it? Confused by why there are so many rates out there? And are you trying to decipher origination, discount points, fees, costs, how to compare apples to apples or oranges to apples, or maybe it's a banana to an apple? I mean, who even knows at this point, right? It's so confusing. Information overload, and what does it all mean? After 30 years in the business, I've had countless conversations about rates. So you're in the right place. And my goal is to simplify all this and make rates and the mortgage process easy to understand. Everybody wants a good rate. However, most people shop rates too early in the process, meaning before you have applied or before you've been pre-approved. Here's the mistake most people make. They assume that the rate they see online or some rate a faceless lender gave you on the phone is your rate. See, what we don't tell you is lenders, we don't lock or guarantee a rate until you're pre-approved and we know which loan program we're putting you in and are you in contract. We have to know what your down payment is because different programs and different payments affect your interest rate. We have to know what your credit score is. We have to pull your credit because your credit score actually affects what your interest rate is. You have to have found your house and be in contract, and you have to have a close date before we lock and guarantee your rate. So up until all of this is done, any rate any lender gives you or any rate you see while surfing online is just a random rate that doesn't apply to you or your loan situation at all. Rates are just advertised online and their best case scenario, 20% down, 740 credit score, closing in under 30 days. Here's the other thing. Rates change every single day based on what the bond market is doing. Often they change multiple times during the day. So honestly, it's impossible to accurately compare apples to apples between lenders. Here's the deal. Until the lender has all your info and offers you a rate and is locking you in writing, a lender can tell you anything they want. But wait, there's more to rates. There are these pesky things called loan level pricing adjustments, which also affect your rate. While your credit score and down payment are two things listed in loan level pricing adjustments, there are a total of 30 factors that go into loan level pricing adjustments. And these are straight from Fannie Mae and Freddie Mac. So all lenders have them. That means until lender has all 30 points of information, we can't honestly give you an accurate rate quote. So even if you get a quick quote, that's probably not accurate. And it's going to move daily based on the bond market. And guess what? There are even other factors to consider, like do we pay a point or not to pay a point? This depends on how long you're going to stay in the house or keep the loan. The rule of thumb is, does the cost of the point save you equal money in 36 months? And will you keep the loan that long? Here's what I mean. If paying 1% towards the rate costs $4,000 and it's saving you $104 a month, that will take you 39 months to break even. If rates drop and you refinance, possibly you won't have the loan that long, or what if you sell? These are things a great mortgage planner will walk you through. Also, none of us work for free. We have to get paid. And if someone is slashing rates and working for free to get your business, ask yourself why. And remember, you always get what you pay for. I'm a certified mortgage planner and have 30 years experience, not only turning renters to homeowners, but helping clients build wealth and understand the market. I'm Stacy, Slam Dunk Mortgage Team, making home loans a slam dunk.